Hey everyone, it's Doug the Retirement Guy with the monthly ETFs. We have 5 high yield portfolio, great for retirement. That's netting over a 30% total yields. We put this together back in March to really test these funds to make sure that these funds are working great, and we want to share with you today. Before we do that, hey, look it, we're a new channel. Don't be afraid to hit that subscribe button. We're looking to have people join us in our community. We were doing all the weeklies and we still are, but we started this new channel that does all monthlies. So don't be afraid, hit that subscribe and help join and create a new channel. Notice to all viewers, past performance does not guarantee future results, and the example suggestions in here are for educational purposes only. You should always consult a financial advisor before making any financial decisions. High yield ETFs that actually grow your money. Discover 5 ETFs that paying anywhere between 15 to 33% in yields that break the traditional yield trap rule. They pay massive dividends while growing your principal over time. It's real simple. It's a 5-piece pie that we have put together for your retirement type portfolio. Very high recognized ETFs, and basically paying off on a monthly basis. So you don't have to worry about your value really going down. It's going to have a nice positive growth and a nice dividend to live off of, and you get the best of both worlds. The yield trap problem. Here's the problem that we've been seeing with the weeklies and all these high yield pieces. It's like putting money down the drain. The promise of a high dividend payments that seem too good to be true. In reality, your $10,000 investment shrinks to about $5,000 while collecting those dividends. And the problem is virtually you're essentially paying yourself back with your own money. This is why the weeklies have gotten bad pay, they've gotten bad vibes from, and it's a yield trap that's out there. So we said we want to do something that does not have the NAV erosion. It doesn't have that yield trap. We want to make pure hardcore cash. So our very first fund that we put together was QQQI. It's the NEOS NASDAQ 100 high income ETF. Now this thing has really done well at 15.35 annual yield. Okay, that is the distributions of 60 cents per month on an annual basis. Now, the total return since inception is about 27%. And we're actually showing numbers possibly a little bit higher across the board because right now, as doing the video, the 1-year return right now is over 10.75 growth. And you can see this thing has had a little bit of a drop like every other fund did back in April, but it jumped back so quickly and right back to where it was a long time ago. And then you look at the dividends, is the calculations were at 60 cents. We're actually getting 62, almost 63 cents per month right now. So things have been very good for the QQQI. And this is a solid fund that you get paid every month. And it's a set it, forget it. They invest in that NASDAQ 100. They do the covered calls onto it. Very solid for retirement income. Our second one is the BTCI. That's the NEOS Bitcoin High Income ETF. Now this one here, annual yield is around 30%, with total returns nearing 60% of growth since the inception of the fund. 1 year already, this thing is at 17.39% in total, just natural growth. And you can see it did exactly the same way as the last fund. It had a bad issue in April, came right out of it, and right back to where it was playing the whole time. Now this one pays $1.40 average monthly distribution, and you can see that we've actually had a little bit higher of 1.435 this past month. So this one writes cover calls on Bitcoin futures, generating substantial premiums from the crypto volatility, and even with the crypto skeptics should consider this one for income generation. As long as we have volatility in the Bitcoin market, This thing continuously pays and pays and pays. Very, very solid piece across the board. Our fund number 3. This is the only one that actually it turned into a weekly. Now, this is why we say we're not 100% against weeklies, but this channel is designed to look at monthly ETFs on a regular basis. And this fund is MAGY, Round Hill's Magnificent 7. Now, what is the Magnificent 7? We'll start in the middle, and that starts off with Apple, Microsoft, Google, Amazon, Tesla, Meta, and NVIDIA. It's the market driving forces in technology and AI. Okay, this one is so great. It pays a weekly distribution. So every Friday you get a payment instead of monthly. So it makes for some huge differences. Now this one has a 34% annual yield, a weekly distribution averaging $1.15 per share monthly. So that's a 13% total return since inception. This thing pays 37.6 cents per week every week. And you can look it down below that in that 1 year market, it's over 7.91% in total growth. Now, the positive of this is the Magnificent 7, the technology, is actually been in a downward slump. It's starting to find its way back out. So I expect the growth of this one to go even higher. And that means the dividends will probably start to continue to grow bigger. Our 4th fund is NEOS's S&P 500 High Income ETF. Now, at this point, you're probably asking, boy, why are we always picking the NEOS products? Well, we did this a little differently because the NEOS products do things that no one else does. In their high income ETFs, this one uses the S&P 500. The fund seeks to distribute a high monthly income generated from the S&P 500 index using covered call. But what they really miss here, because what they do differently, is they use data-driven call option strategy. That's across the board on NEOS. They use the data-driven. So they're not only just looking at numbers that, oh, we can sell this at a higher number or this is going to go a little bit higher. They actually have the computers. They're almost literally using AI to help drive numbers higher. So they know what's going to do it properly. It's an actively managed NEOS fund. And here's the big advantage that you use with the NEOS. They use a tax loss harvesting opportunity. It's basically section 1256 if you're familiar with that. But basically what it does, it lowers your tax rates on the distributions across the board. So you're going to pay less taxes using the NEOS funds than you do using another identical fund. When you take a look at this one's paying out monthly, distributions rates at 12.19%. The expense rates are very reasonable at 0.68%. And you look at the dividends that they've paid out, 51.8 cents on a rise. It's rising up on that monthly payout. Now look at the return. In 1 year, it's a 5.50% in the bad times currently that we've had in the stock market. You look at that only real drop off that they had was the April 2nd when the tariffs came into play. And this thing has been solid and again, returning right back to where it's supposed to be. Our 5th fund, IWMI, NEOS's Russell 2000. This is the exact same thing that the NASDAQ does, the S&P 500 does, and now they do it with the Russell 2000. So they're using the tax advantages. They're seeking high monthly distributions and generating from their covered calls. This one, distribution rate, 14.56%. Expenses the same. This thing has had a solid run. Now, it has not recovered, and the Russell has not recovered as well from that April 2nd tariffs. But we're only down 1.78% total in 1 year. When we take a look at the dividends, you're collecting 56.2 cents each and every month. These are solid hardcore numbers. So how does this look into it if we put this into our own personal strategy? Well, we put this portfolio together, as I said, back in March to really try to give us some good judgment on what's going on to it. And we built a program that the portfolio allocation is spread across all 5 ETFs rather than concentrating on just one that pays the biggest or does the best. And we basically got into $125,000 invested into the 5 funds, which is $25,000 each. If you take a look at what's happened just in those since March to this point, which is about 5 months, you can see every one of the funds are actually up. The fund growth is $12,963 in 5 months, or 10.37%. That's phenomenal. If that ended today in 12 months, I'd be ecstatic. But this one really gives you a 10% growth in 5 months. If it continues doing what it's supposed to be doing and continues as it's been doing, you're talking a 20% return just in growth alone. The other one is take a look at the dividend income. It's equal to what your growth is, $12,587 or 10.07%. That's giving you an estimated 24.16% over a 12-month period. Okay, at 24% off of that, you're easily going to be close to that $30,000 of income just from a $125,000 investment. That's phenomenal. So as we look at this right now, the growth fund has gone to $25,550 or 20.44% in 5 months. If both of these continue doing what they're doing currently, you're going to be well over a 40% total return. And that's what makes this so great for retirement. If you're not in a big retirement, if you're financially in an area that you can afford to live off of maybe $30,000 a year plus Social Security, for $125,000 total investment, you could retire comfortably. So that's why we wanted to do this. Now, we always throw out there is you need to monitor and adjust. Stay informed about the performance and be prepared to make adjustments and strategy as the stock market changes. I'll tell you straight out, the truth behind this, MAGY has not been out since March. We added that on our own when we saw an adjustment. The previous fund that we had was not performing. So we sold off and bought this one to put it into the portfolio, and it's done better than most that we were expecting. So this is why we always say you monitor and adjust as you go through. Your next move is 5 high yield ETFs that grow your money while paying a substantial dividends. The key is balance. Use them to enhance your income while maintaining traditional and good investments. Research further, consult an advisor. Start small and get big. Remember, this is for educational purposes only. Always conduct your own research and consultants for a qualified investor. Guys, this is Doug the Retirement Guy. This is our monthly channel. If you like what we're doing, hit that like button. Join us. Join the family. Hit that subscribe and definitely leave a comment what you think. We'll see you next time.